Good afternoon, everyone. Thank you so much for joining us for today's conversation about Spectrum Group's August Investor Confidence Indices, as well as some highlights from our second quarter research with wealthy investors relative to their usage of social media and mobile technology in financial decision making. My name is Randy Wostrowski, Director of Development here at the Spectrum Group, and I'm happy to be joined by Spectrum Group President George Walper. George, thanks so much for being here.
Thanks, Randy, and good afternoon to everyone.
All of you should see a gray tab on the right-hand side of your screens that you can use to submit questions. Please feel free to do so at any point throughout the webinar, and we will answer those questions as they come up. Starting first with Spectrum's Affluent and Millionaire Investor Confidence Index data on the third page. George, how are wealthy investors feeling this month?
Well, the month of July was quite interesting, Randy, especially if you define interesting as nothing interesting happened. Last month, we actually fielded our research for the index before the vote in the UK to leave the European Union. And so we were a little concerned that with all the volatility that week, that our index may have been overstated. So this, of course, was fielded afterwards. And for those of you that are not familiar with our index, each month we ask a series of questions to wealthy Americans, both those that are net worth over $500,000 and then another subset group over $1 million. Because of the volatility in that first week after the vote, we thought that this month's would be all over the place. It turns out that it was almost exactly flat from a previous month, last month, and more interestingly, essentially where it was a year ago. So sometimes you spend the whole year worrying about the market and what affluent clients are thinking, and 12 months later, it feels like they really haven't gone anyplace. But then you look back month by month, you can see that here, that each month there's been pretty significant swings when you compare a 12-month period, and we're back to where we started a year ago, a little bit lower than we started 12 months ago in some categories. So the bluish purplish line here, which is always on the top, will be our Millionaire group, and the amber, yellow, orange line, depending on your colors, is our overall Affluent. You essentially see that the last month it's basically unchanged. Now, what's also interesting from that is that the unchanged part, there's a lot of subcomponents we'll talk about here. You see that a little bit right here in particular. One of the critical areas to always think about when we look at the index is how do wealthy investors feel about a series of issues affecting their own personal life. We call it the Affluent Household Outlook. And you can see how much that has moved in a year from July of last year with a significant lowest point in January of this year, and essentially returning almost to where it was a year ago. And yet you look at the month-to-month swings that if you're advising wealthy clients or supporting advisors who do support and advise wealthy clients, it's very, very important that these advisors realize that month to month, there's a fairly large, significant emotional swing quite often in terms of how your clients are feeling. And yet, look from November to March, where you have that huge drop and right back up by March during that time period, November to March. In that months in between, clients were very nervous, very upset. A lot of that was, I believe, the activity going on in China. And advisors really need to think month to month as well as long term in terms of talking to clients. The overall household outlook is comprised of a couple of subcomponents. Household income, their outlook about the economy, their perception of their employers or their own company's general health, and what they think about the assets. So you can see month-to-month change, July to June, not very significant changes, with the exception of the economy. That's a pretty significant increase for that component, and the economy is always a critical driver of how people feel. A little bit down from last year in most of these categories, but the fact that the economy now is looking upward would suggest that the next few months you're going to see these numbers in the outlook probably start to trend upwards, especially given that the market continues to be in a fairly close to high level basis. Sometimes it drops each day, but essentially you're still trending near the top. You also have a traditional month of August where folks are either, depending on where you are in the country, leaving for vacation or returning from vacation, depending on when schools start. In the Midwest, people are ending their vacations. I know on the East Coast, people are tending to head off, coming back after Labor Day. And that's all impacted by the presidential election year as well. For those of you that have been attending in the past and our clients that are on the call, this year we decided to look at these numbers in the indices based on how people indicate their political affiliation is. It's something that we don't publicize a lot in terms of, because we're not a political polling firm, but we felt it was kind of interesting to track some of these numbers. So you see Republican, Democrat, and Independent. And typically what we have seen throughout the year is fairly significant differences between Republicans and Democrats, with Independent being historically this year in between. This month, I'll talk about the economy in particular, because that's kind of different than what we saw earlier this year. A few months ago, we saw that Republicans felt that their outlook for their own economic situation relative to the economy was very, very low, and still much lower than Democrats. But there was about a 30-point swing difference a couple of months ago, with independents being in the middle. You now see independents having a little bit more of a negative outlook towards the economy compared to Republicans, and both of them lower than Democrats. When you look at the rest, they're all fairly similar. And when we look at investing, as we have in other months, how all three political affiliated investors invest is similar. But it's always been about the economy throughout this year, with Republicans now trending a little bit upward in terms of what they're feeling about things.
Well, and I think as we see here, those who identify as Democrats certainly have a more positive outlook towards their overall financial health relative to their household. So here's a question that came in, George, with all of the political turmoil that we've seen during the election cycle and a lot of back and forth from both sides. Do you think part of the optimism that Democrats have is based on their expectations kind of relative to Hillary Clinton's electability come November, almost as a path of less resistance than as opposed to Donald Trump?
Well, I do think that depending on folks' belief about economic policy, job creation, government support, government spending, that at the moment, with Democrats being in office, at least at the presidential level, that there is the belief that the Democratic Party will win, and that will continue in their minds the economy the way that they like it. And that's why you see such a variance here from Republicans, because they'll say it's exactly the opposite of the economy we like. I wish we could say that it's been heated throughout the year, but I just think that once Labor Day, traditionally Labor Day hits, although it seems to have hit in terms of political commentary right now with all the cable networks, but once Labor Day comes around and people start really focusing on the election, I think this is going to get ugly in terms of how people feel about all these different subcomponents. We always ask a series of rotating questions. This month, I like to say we asked the sort of fairly obvious answer to the straightforward question, which is, what do you feel is affecting your investment plans the most? And they always say the stock market. Political climate for this type of question doesn't really resonate much, which is kind of different from what you would think from Randy's question from the group, because even though people have different political affiliations, when it comes time to what it means to the market, they have a different attitude towards that. When we look at the same set of questions on an historical basis, you always see that the market, their feelings are the market impacts their portfolio more than anything else. They're worrying about retirement becomes an issue. Some of you may have seen some research we released actually last week on Social Security questions relative to wealthy investors and how important Social Security is to their overall income stream and retirement. And frankly, you see a lot that people worry about retirement independent of levels of wealth. And in their minds, Social Security, although it may not play an important economic part, is really important to them emotionally. So the topic of retirement is always high.
And I think it's interesting when you mention that Social Security type concern is that you have so many people in this country that obviously have paid into a system that they don't really know the best way that they should then start drawing down the money and what the true expectation is for not only when they should start drawing it down, but what to expect as far as their year in retirement, and then what that will mean from their income stream for the rest of their lives. So that lack of knowledge and lack of readily available data about the timing for when people should start utilizing those Social Security benefits, that uncertainty drives worry as well.
It's an amazing worry relative to the levels of wealth. I mean, Main Street America, it's a major part of their retirement income, but even for wealthy Americans, as Randy said, the emotional part of that outweighs the financial part of it. How these folks, wealthy investors, are investing for the going forward. Here we look at sort of four traditional asset classes, and you'll see on the next page we talk a little bit about non-investing or completely on the sidelines. You can see that equities remain somewhat higher, although we always find it interesting in folks' difference between individual equity investments and equity mutual funds, where they both are dropping a little bit this past month, but overall in the past year they've trended somewhat downward. I think a lot of this is the reaction to the fact that the market's been fairly high, other than in the first couple months of the year, and I think folks are saying, is it too high to put more money into? So you see cash is a category that this past month ticked up a little bit. And then as did real estate. I think real estate's a class of investment that income-producing real estate in particular, wealthy investors are very, very focused on. As wealth increases, we see that as an asset class, along with alternatives that they view as very important for them to outperform traditional markets. Same thing relative to their political affiliation in terms of how they're investing, and you see that with the exception of equity mutual funds, they're essentially very similar in their investing. Over on the right, the non-investing category, which at the moment is high compared to other months, and that relates more to folks feeling probably at this point that the market is at a pretty high level and not a time to put more money in the markets. But independents, I think that's quite high for independents, especially when you look at their other asset categories where they're lower in equities, about the same in mutual funds, and then bonds and real estate, et cetera. With real estate being the highest for Republicans, that's a very interesting difference between real estate between Republicans and Democrats. That's the biggest difference in terms of a category.
So going on to slide 13, you can see as we get into some of the key findings from our recently published research with wealthy investors relative to their social media and mobile technology habits. We can look at a breakdown of Facebook usage, particularly among the mass affluent, where you have 84% of mass affluent millennials who are active users. So my question, George, is can financial advisors continue to remain passive about their engagement with clients, especially younger clients, on this particular platform? Or is it something that advisors need to understand that having a platform presence on Facebook is no longer just a differentiator, but it's almost a true necessity, especially in light of all the discussions that we have with our clients about the concept of managing multi-generational client relationships?
So social media is critical. It's something that more and more firms, in particular advisors, their own firms or who they custody their assets and trade through with their policies, but more and more firms are becoming a little bit more comfortable from a compliance standpoint with social media. Our second quarter research every year is dedicated, as Randy said, to social media and mobile technology relative to how wealthy investors use it in their financial life. Facebook, LinkedIn, Twitter, Pinterest, and YouTube are the key ones we looked at. But what is true is what Randy said, which is, and we've seen this, of course, sort of sometimes the obvious. The younger folks have led the way with social media. But what's more critical with millennials and Generation X investors, and for those of you that engage in our more in-depth reports, you see this, the level of wealth of millennials and Generation X investors is growing pretty rapidly through both their own wealth creation, and a lot of them are in technology or other social media type careers. And secondly, you're starting to see some inheritance moving from World War II and baby boomer generation to millennials and Generation X. The point being is that this was a group that 5 years ago, these two groups, millennials and Generation X, you could probably ignore comfortably for a few years, but they are now a critical asset category of opportunity for advisors. It's a critical group of investors that need attention, and they do use social media. They use technology, they use social media. But look at the green and blue, so that's the sort of World War II, I'm sorry, no, that's not the World War II, that's the ultra-high net worth, the Millionaire. But look at ultra-high net worth, which traditionally is older and more retired. they're becoming more and more interested and active, at least in Facebook, LinkedIn, and YouTube. And we're going to spend some time talking about videos here as we look at this. We also looked at the type of technology that they utilize to access information, where 10 years ago it was primarily led by first PCs and Macs and then smartphones. They weren't that smart 10 years ago, but they clearly are now, and tablets. And you essentially see that it's almost the same. Yes, PCs still are a little bit larger, but the tablets and smartphones, the mobile technology element of everyone's life, is large. And these are the tools that they want to use to interface with their financial provider and their financial advisor. And they expect providers and advisors to support those platforms from a mobile standpoint, but also in terms of how they use it.
And one thing I'd like to add there that I think is quite interesting is you're looking at the ultra net worth. You have almost 3/4 of those respondents. So ultra net worth, which we categorize as those between $5 and $25 million of net worth, not including their primary residence, that again are using those tablets or e-readers. Same thing where you have over 3/4 of the ultra net worth are using a smartphone. So this is impactful because of the fact that you have so many folks leveraging these types of technologies that they also expect you as an advisor to them to use these types of technologies. Therefore, there's a much increased expectation for your ability to either return a voicemail or get back to a client via email. It's because of the continued emergence of these technologies that there is that expectation for higher and much more responsive contact with the clients that you're serving. Again, in part because of the fact that the technologies that they're using really puts the contact right at their fingertips.
So in terms of some of the different ways that they use this technology in their financial life, you can see viewing different services and products, articles, experts from advice, case studies. Now, case studies has always been a belief of a popular item in terms of a way to demonstrate one's skill set, etc. That actually scored pretty low. And videos continues to increase in terms of utilization by folks. We also asked about applications or tools. Think of online tools, not just mobile apps, but online tools that people have. And again, this is pretty straightforward, makes a lot of sense, budgeting tools, etc. I think the one that I would point out that is interesting because this goes back and forth over the last 10 years, and that's the tools to consolidate accounts from multiple providers. In the old days, we would call that account aggregation. Nobody likes that term anymore. But that actually is growing, and folks are viewing now, because of their comfort with mobile technology and really online banking, online other information, that's an area that they would like all their providers to provide, and it also is a way to make money, assets stick with you because it's much more latched on. All planning tools are important to these investors of all levels of wealth, and you really get into that even in more age when you see that, younger investors. Types of videos watched. Videos are an important growth in terms of providers and advisors providing videos on their site, updating those at least a few times a week. It's not that difficult to do. But look at that, financial information videos is pretty high. And then videos by financial commentators and financial events as well. The other one that we didn't pull highlights from for this presentation, but I think is important for the audience to recognize a little bit what Randy said, and that is the increased interest and preferred use of Skype or FaceTime like communication calls, or think of advisory with their advisor, where we now have about 50% of all these wealthy investors are saying, 50% are saying, I would be interested in using Skype or FaceTime to communicate with my advisor. That's important because that's an expectation. It's where mobile technology has moved all of us. It's how most of these investors communicate with their family, their friends, and they now really want the financial community to respond the same way. And I think each firm needs to establish their policies and procedures and react to it from a compliance standpoint, because it's a great way to establish a pretty in-depth personal relationship.
So if you go on to where the next slide is, that speaks a little bit about our one of our offerings, which is our High Net Worth Insights monthly newsletter. So we do have these available on both an individual and corporate-wide subscription basis. Please do not hesitate to reach out to me if there's any interest in discussing partnership opportunities in this regard. As I'm sure many of you on this call know that I've reached out to you, I'm sure, before. So as the one and only person that is in charge of our business development here at Spectrem, I would not be doing my job if I did not bring up that type of opportunity for partnership and leveraging Spectrem's insights. Of course, if there's anything else at all that we can do to be of service, or if there's any other particular research reports that you would like to discuss, I would definitely appreciate the chance to set up a call. And with that being said, I would like to open up the floor for about 30 seconds to a minute here if anyone would like to submit an additional question for us to answer. It does not appear as if we have any questions coming in, so that will be all for today's webinar. Again, thank you so much, everyone, for joining us, and have a great afternoon. Take care.